Welcome second PU Commerce students to Exam Tips and Tricks channel. Today we will work out one of the question from the model question paper based on the retirement of a partner. We have already learnt in case of admission of a partner how a revaluation, partner's capital account as well as balance sheet that has to be prepared. Today we will understand preparation of these three accounts: revaluation account, partner's capital account as well as balance sheet on retirement of partner. So this is one of the important question from the model question paper. So three partners are Ajay, Vijay and Sujay are three partners. Their profit sharing ratio is given as 2:1. Their balance sheet as on 31/3/2024 is given as below. So balance sheet is given in the question. Liability side, creditors, bills payable, general reserve, three partners capitals. Asset side, cash bank, debtors, provision, stock, machinery, furniture, buildings. Then Sujay is the partner who has been retired on 1/4/2024. So you need to write the balance sheet on the date of retirement, that is 24. So first we will make the entries, how it has to be made. So liability side, creditors, that is given, so it has to be recorded in the balance sheet on the liability side as creditors. That is the first entry, 35,500. Bills payable, as usual, this is one of the liability of the firm that must be disclosed under liability side of the balance sheet without any changes. General reserve, that has to be distributed among three partners, all the three partners. General reserve including retiring partner also. He is also entitled for the share of general reserve. So three partners share will be 2:1. Three partners capitals given, record as balance brought down. So in this partner's capital account, it has to be recorded as balance brought down. So three partners capitals, 50,000, 30,000, 20,000. So this is the entry. Next, asset side, cash bank, that is one of the current asset, cash at bank, that appears under asset side itself. Next, debtors, that is also one of the current asset with a provision, PPD, with certain adjustment. Next, stock is given, the value of stock, that is 20,000. So there is appreciation in the value of stock, increase in the value of stock, that has to be added. Next, machinery, furniture, that also has to be adjusted. Machinery, the value of machinery is 20,000. Next, furniture, The value of furniture is given as 10,000. That must be recorded. So building value. So building, the value of building is 50,000. So these are the entries that has to be made. So creditors, as usual, creditors under liability side of balance sheet. Bills payable, liability. General reserve, it has to be distributed among all three partners, including retiring partner also. Three partners capitals given, record balance brought down. Three partners capitals, Ajay, Vijay as well as Sujay, 50,000, 30,000, 20,000 respectively. Next, cash bank, that is one of the current asset, record under asset side. Debtors with PBD, again stock with certain adjustments, machinery with certain adjustments, furniture, building with certain adjustments that has to be made. So next, additional information. So additional information, Sujay retired as on 1/4/2024. Sujay is the retiring partner from the business. The following adjustment that has to be made. So first, stock to be increased by 20%. The value of stock that has been increased. So stock account. So the value of stock is 20,000. It has been increased by 20%. So that will be 4,000. This is one entry. So these additional information we need to make two entries. One entry on the credit side of revaluation account, and another entry as there is increase in the value of stock, so it has to be added. So that will be 24,000. So two entries, one entry on the credit side, another entry in the balance sheet, that must be added. So maintain PBD at 10% on debtors. So provision for bad debts. So it has to be provided on debtors. So the value of debtors is 40,000 on which it has to be provided. So now the present PBD is 4,000. Earlier it was 2,000. PBD has been increased. Increase in the provision, that has to be debited. Decrease in PBD, that must be credited. So now present PBD is 4,000. Earlier it was 2,000. So in this revaluation account, we need to show the difference of 2,000. So there is increase in the value of provision, and in the balance sheet, what is the actual provision that is provided, that must be deducted. So 40,000 minus 4,000, that will be 36,000. So this is the second entry. So provision, increase in provision, that has to be debited, decrease in provision, that has to be credited. So provision has to be provided on the value of debtors, that is 40,000. So 10% provision means 4,000. This is the present provision. So but in this revaluation account, we show the difference. So earlier it was 2,000. Now it has been increased to 4,000. So there is increase of 2,000. And in the balance sheet, we show the present PBD that is being provided. So these are the two entries that has to be made. Next, depreciate machinery and furniture by 10%. The value of machinery as well as furniture, that has been decreased. So decrease in the value of assets, machinery as well as furnitures are the assets. So decrease in the value of asset, that must be debited. So debit machinery account as well as furniture account, because the value of fixed asset that has been declined. So the value of machinery is 20,000, provide 10%, 10% that will be 2,000. Again furniture, the value of furniture is 10,000, so 10% depreciation that has to be provided, so that will be 1,000. So this is the entry. One more entry, so it has to be deducted as depreciation that has been provided on the machinery. 2,000 that must be deducted, so that will be 18,000. Again furniture, there is depreciation that is provided at the rate of 10%, so that is 1,000. So 10,000 minus 1,000, that will be 9,000. So these are the two entries. So depreciate machinery as well as furniture. The value of these assets that has been declined by 10%. So the value of machinery is 20,000. 10% means 2,000. Again furniture, value of furniture is 10,000, on which 10% has to be provided, that will be 1,000. One more entry, it has to be deducted from machinery as well as furniture, and the amount that must be recorded under amount column. So these are the two entries that has to be made. Finally, goodwill, treatment of goodwill. So goodwill that has to be treated according to Accounting Standard 26. The firm's goodwill is given. We need to find out retiring partner's share of goodwill. Then that will be compensated by remaining partners in their gain ratio. Okay, so this is how goodwill that has to be treated. So firm's goodwill is given. So firm's goodwill is given. Goodwill of the firm is given as 15,000. We need to find out a retiring partner's share of goodwill. His share of goodwill is 1 by 5. 2 is to 1, in the sense Sujay is the retiring partner. So his share of goodwill that has to be found, and that is 3,000. And this goodwill amount that must be compensated by remaining partners Ajay and Vijay in their gain ratio. So their gain ratio is 2:2. That can be written as 1:1 also. It can be simplified as 1:1. So they are compensating equally, in the sense both partners compensate 1,500, 1,500. So in this question, some cases retiring partner share of goodwill also may be given. In such a case, once again, we need not find out that. So we can, in case if retiring partner share of goodwill is given, so his share of goodwill will be compensated by remaining partners in their gain ratio. But in this question, firm's goodwill is given. So we need to find out retiring partner share of goodwill that has to be compensated by the remaining partners in their gain ratio. So the treatment of goodwill, so the journal entry will be remaining partners capital account debtor to retiring partners capital account. So this is a journal entry that has to be passed. So remaining partners capital account debtor to retiring partners capital account. So remaining partners capital account 1,500, 1,500. So they are the remaining partners. Remaining partners capital account debtor to retiring partners capital account. Sujay's capital account. So this is the entry. One more entry. Retiring partners capital account has to be credited with remaining partners capital account. So retiring partners capital account 1,500, 1,500. Retiring partners capital account has to be credited with remaining partners capital account. Ajay's capital account, then Vijay's capital account. So this is how goodwill that has to be treated according to accounting standard 26. So remaining partners capital account debtor to retiring partners capital account. Retiring partners capital account has to be credited with remaining partners capital account. So this is how goodwill that has to be treated. So these are the entries that has to be made according to the question that is being given. Now we need to close all the accounts. So first we will close a revaluation account. So first we will complete revaluation account, then we will complete closing of partners capital account, finally balance sheet, preparation of balance sheet. So revaluation account can be closed by the way of finding out one more entry. Buildings are revalued. So buildings, when the value of building, when it is revalued, now the present value of building is 60,000. Earlier it was 50,000. So there is increase in the value of building. So increase in the value of building. So earlier it was 50,000. Now the value has been increased to 60,000. In this revaluation account, we are disclosing increase or decrease. What is the difference? That has to be disclosed in this revaluation account. So the difference is 10,000, and in the balance sheet, what is the present value? That is 60,000. So there is increase of 10,000 and the present value will be 60,000. So this is the entry that has to be made. Now we need to close this revaluation account. So the total will be 14,000. It has to be total 14,000. So write the same total under debit side also 14,000. So from 14,000, as we deduct 2,000 as well as 1,000, so there is a profit on revaluation. This profit has to be transferred to partners capital account. Transfer to partners capital account. This is a transfer to partners capital account. So it has to be distributed among three partners: Ajay, Vijay as well as Sujay. So three partners. So 3,600, 3,600, then 1,800. So 9,000 that has to be distributed. All the three partners are entitled for the share of this profit on revaluation. In their profit sharing ratio, that will be 2:2:1. So Ajay has to get the share on revaluation, profit on revaluation, his share 3,600. Vijay has to get 3,600 and Sujay has to get 1,800. And this profit that has to be transferred to partners capital account. So now preparation of partners capital account, that has to be prepared. Finally balance sheet has to be prepared. So this is how partners capital account that must be prepared. So partners capital account, three partners capitals that must be disclosed as balance brought on. Then general reserve. So all three partners are entitled for the share of general reserve. So it has to be distributed 2:2:1. So that will be 1,000 as well as 500. Then treatment of goodwill according to accounting standard 26. So this revaluation profit, what profit we get in this revaluation account, that must be transferred to credit side of partners capital account. If there is a loss on revaluation, then it has to be transferred to debit side. So profit on revaluation, that must be transferred to partners capital account under credit side. So that is the profit on revaluation. So all the three partners are entitled to get their share of profit. So that will be 3,600, 3,600 as well as 1800. So now this partner's capital account has to be closed. Partner's capital account, that must be closed. So it can be closed by the way of making the total under credit side. So the total will be, so Ajay's total will be 54,600. 54,600. So next, Vijay's total will be 34,600. Finally, Sujay's total will be 25,300. Okay. So 25,300, write the total under a debit side also. So this is the amount payable to Sujay. Sujay is the retiring partner. It must be recorded as Sujay's loan account because he is the retiring partner. He will not continue further in the business. So what is the amount payable to Sujay? That must be recorded as Sujay's loan account. So remaining partners will continue in the business. So their closing balance, that must be found. So Vijay's total amount is 34,000. From 34,000, as 1,500 is deducted, then closing balance will be 33,100. Again, from 54,600, when 1,500 is deducted, so the closing balance will be 53,100. So this is how partner's capital account, that must be treated, that must be closed, and the retiring partner's payable amount, that has to be recorded as retiring partner's loan account. As this amount is not being settled, then that is a liability for the firm, so that appears under the liability side of balance sheet because still the amount is not paid to the retiring partner, so it is one of the liability for the firm, so it has to be recorded under liability side in the balance sheet as 25,300. So remaining partners, it must be recorded as capital. So remaining partners are Ajay as well as Vijay, who will continue further in the business with a capital amount of 53,100 as well as 33,100. So now this balance sheet, that has to be total, and liabilities, that must be equal to assets. In the balance sheet also, the entries what we have recorded as under liability side, creditors, bills payable, then retiring partners loan, remaining partners capital amount. So cash at bank, debtors, what is the present PBD, that must be deducted. Stock, there is increase in the value of stock, that must be added. Machinery depreciation, there is decline in the value of machinery, that must be deducted. Furniture also decline, and building value, that has been increased. Now present value of building, that is 60,000. So this balance sheet, that has to be equal with amount 1,67,000. 1,67,000. So that is the total of balance sheet amount, that has to be equal, liabilities has to be equal to assets. So this is how this revaluation account, partner's capital account, as well as this balance sheet on retirement of a partner, that must be prepared. Thank you.